Hello and welcome all. Today we are going to discuss about IAS 16 Property Plant and Equipment PPE. My name is Vinod Khatri and I'm a chartered accountant by profession. And today I'm taking you through the IAS 16 Property Plant and Equipment in briefly, and you will be understand how PPE is formed and how to apply PPE in preparation of financial statement and presentation in financial statement. Let's start today's class now. So let's discuss about the table of content. Today we are going to discuss definition. We'll be talking about definition of ppe given by IAS 16. Then after we talk about recognition criteria given by IAS, how to recognize ppe in financial statement and what all are the criteria given by the IAS. Then we talk about measurement criteria given by IAS, what all are the measurement criteria we need to check before measuring IAS in financial statement for PP in financial statement. There are two type of measurement: initial measurement and subsequent measurement. Initial measurement, when we buy or purchase, acquire any asset, we need to apply initial measurement given by IAS, and for future year or for subsequent year, we have to apply subsequent measurement to measure PP in financial statement. Then after we talk about depreciation, how to apply depreciation and what all are the method given by IAS for charging depreciation and presentation of depreciation in financial statement, and the consideration that we need to uh, consider before applying depreciation. And then we have de-recognition, when to de-recognize PPE from financial statement, some condition given by IAS. Then finally we talk about disclosure given by IAS that need to be disclosed in financial statement. Before IAS implemented in India, there used to be two different accounting standard for depreciation and another one for fixed asset. I Accounting standard 6 was for depreciation for on fixed asset and the intangible asset, and for there was another accounting standard, accounting standard 10, which was for fixed asset. So there used to be two different accounting standard for PPE, but now it consolidated into one single international accounting standard. We can say IAS, International Accounting Standard, which is IAS 16. So both the thing, measurement and recognition of fixed asset, which is also called as PPE, is covered by this standard, as well as depreciation process for PPE is covered by single standard now. Let's move to this definition part given by IAS, property, plant, and equipment definition. As for IAS, PPE is a tangible item. Tangible means any item that we can see or touch. For example, building, plant, machinery are the tangible item. PPE, this accounting standard doesn't cover any of intangible asset like goodwill and brand and other intangible asset. And it must be tangible item to be covered under PPE. Then it should be held for use in production or supply, rental, or administration. Tangible item held for use in production, for example, any machinery plant can be used for production of different goods. And then supply, if you take an example of supply, for example, vehicle is used for supply of goods or goods. And rental means, for example, we have a car and we are giving that car to rent to other people, then it also covered under PPE. Then administrative purpose, for example, for if we have a service industry and we have furniture, television, and different kind of other thing like building is also used for administrative purpose to generate the revenue. And final thing, expected to be used more than one period. We can only recognize PP in financial statement if it made all the three conditions: tangible item, held for use in production, supply, rental, or administrative purpose, and expected to be used more than one period, which is also called as fixed asset. If all the three criteria are met, then we can recognize, or we can say that this is a PPE, plant property and equipment. So we have to uh, very careful about all three condition. So expected to be used more than one period. For example, if we bought a car, or we have a car, then we can use that car for more than 1 year, one period. So that is a PPE. And for example, building is also can be used for more than 1 year. That is why building is covered under PPE, and that must be held for production, supply, and rental and administrative purpose, and that should be tangible. Then only we can say that this is a PPE. Now let's move to the recognition criteria. Uh, we now know that we can identify whether this is a PPE or not. Now we'll have to check recognition criteria for PPE. There is some standard criteria given by IAS, and there is a standard criteria. First is two criteria. There should be probable future economic benefit will flow to the entity. We are expecting something we will receive using that asset, and cost can be measured. Then only we can recognize any PP, or we can say this is the recognition criteria for asset as well. If we are seeing any future benefit, then only we can recognize that as a asset, or the cost should be measurable. For example, let's take examples for future economic benefit. So we have a plant, and we'll produce some goods, some goods, and it will, after selling that goods, we'll get something, some benefit or some revenue from that plant. And we can measure the cost of that plant. When we purchase that plant, we have a certain cost. For example, cost of plant is 100,000, 1 lakh, and uh, th- that PPE or that plant is generating some revenue, then only we can recognize that as a PPE. So we should be very careful about these two conditions. First is there should be some probable future economic benefit or revenue generating, and cost can be measurable. That sometimes some administrative goods doesn't directly generate revenue, but they are incidental to generating revenue. For example, AC used in the office doesn't directly generate revenue, but it will help other things or employees to generate revenue. That is why we capitalize and we consider that as a PPE. So now let's move to the again talk about recognition for different part we use in the PPE. Repair and maintenance. Regular repair and maintenance on a uh, daily basis or on a systematic basis will charge to profit and loss account, because that will not meet the recognition criteria, which is expected to be used more than 1 year. And so we recognize repair and maintenance on PPE as a in profit and loss account. Second, replacement at a regular interval. We recognize replacement, major replacement in carrying amount of PP if and only if recognition criteria met. We have already discussed the recognition criteria. If recognition criteria is met, then we recognize replacement cost or major replacement cost in a PPE cost. For example, we are replacing major part of aeroplane in a regular interval or sometime. So then we must recognize that part as a PPE and de-recognize the old part used in that plane, because that made the recognition criteria. And major inspection also recognized in carrying amount of PP. Carrying amount is book value of PP if and only if recognition criteria are met. For both replacement cost and major inspection, we only recognize those in carrying amount of PP if recognition criteria are met. So we have already discussed. That is why I was saying recognition criteria are very important. So you need to know those criteria before you want to understand this complete IAS PP in detail. So now let's move to the measurement again. For measurement, there can be two types of measurement, as we have already seen the table of content. First is initial measurement. When we buy any asset, that is an initial measurement. When we purchase something, that is a first time we are recognizing in financial statement, that is the initial measurement. And second is subsequent measurement, which is after the purchase of asset, second year, third year, we'll have to apply subsequent measurement given by IAS. So basically, under initial measurement, cost of acquisition is the amount that we recognize in financial statement. We'll be discussing this in the detail. And for subsequent measurement, we have two model to recognize PP in financial statement in subsequent years: cost model and the revaluation model. So let's discuss these models in detail. First, let's talk about initial measurement, component of cost in initial measurement. For example, we are purchasing some AC or some other equipment. Purchase price plus non-refundable duties and tax minus trade discount is something that we consider as a component of cost. For example, purchase price of AC is 30,000, and GST, we are assuming that GST is non-refundable, uh, and GST is, for example, 18%. 18%, for example, 10%. 3,000 is GST and 30,000. Total 33,000 is the cost of uh, AC, including non-refundable tax, which is GST. We assuming that GST is non-refundable for this example, and trade discount. Uh, Seller is giving trade discount of 5,000. The total cost for this AC would be 30,000 plus 3,000 minus 5,000 trade discount, which will be around 28,000. 28,000 will be capitalized in the books. And then directly attributable cost like installation cost, handling cost of AC. If we are buying AC, we'll have to handle that AC, transfer that AC to place of installation, and install that AC. All the cost will be capitalized. And finally, if you are estimating any cost will be there will be any cost to dismantling and removing that AC and restore the place of original installation, that then we need to also capitalize those costs. To take an example, for example, we are installing AC in a specific place, and we need to, after 3 year or 5 year, we need to remove that AC and restore that place. For example, the cost of removing that AC from that specific installed place and restoring that place into the original condition is 5,000, or we can say 2,000. Then that 2,000 will be capitalized in PPE total cost. Then in our original example, total cost was 28,000, and 2,000 additional 2,000 will be added in the cost of AC, and total 30,000 will be capitalized in the books. So that is how we calculate the cost in under initial measurement cost of PPE: purchase price plus non-refundable duties and minus trade discount plus any directly attributable cost and any initial estimate of cost of dismantling and removing the item from the original place and restoring that place. And what if we are exchanging asset? We are not buying any asset, but instead we are exchanging asset from uh, other existing asset. In that case, cost should be measured at fair value. If we know the fair value of some specific that asset, we'll measure cost at fair value. And if fair value is not available, we'll use carrying amount of asset given off as a initial measurement or initial cost for that asset. For example, we are now want to after 1 year we want to replace that AC which was bought, which was capitalized at 30,000, and the carrying amount after 1 year is, after depreciation and all the thing, is 25,000, and we are replacing that AC with other AC. Then we'll need to capitalize that new AC in 25,000, which is the carrying amount of asset given up. Asset given up means we are giving that asset in exchange of our original asset, and we are receiving another asset. So another asset will be capitalized in carrying amount of asset given up. That is the initial measurement. Now let's talk about subsequent measurement. After initial measurement, how we will recognize PP or fixed asset in financial statement. First, let's talk about cost model. Cost model is cost less we deduct any accumulated depreciation. That we'll talk about depreciation in later part. So any cost means initial, for example, we are talking about AC, the total cost was 30,000, and we'll deduct depreciation on accumulated depreciation on that AC, and also deduct any accumulated impairment loss. If any impairment loss is there, we deduct from the original cost less accumulated depreciation less accumulated impairment loss would be the uh, carrying amount of PPE under cost model. So that is how we calculate carrying amount of any asset, carrying amount or book value of asset in a subsequent measurement for under cost model, if you are applying cost model. And in case of a revaluation model, we calculate revalues fair value of date of revaluation. For example, after 1 year we are revaluating that EC, and we see that the current market price or fair value of this asset is not 25,000. We are seeing that it will be the fair value of this asset is 28,000. Then the fair value of asset less accumulated depreciation after that period, and any impairment, subsequent accumulated impairment loss will be deducted from that fair value, and the carrying amount is calculated on revaluation model. Basically, we calculate fair value of that asset and deduct any depreciation or impairment loss to calculate carrying amount under revaluation model. So these are the two model used for subsequent measurement of PPE, cost model and revaluation model. So very easy models. And one more thing, uh, very important, under revaluation model, if we are revaluating one asset under one class, we need to revaluate entire class of PPE under that class. For example, we have 10 buildings and we are capitalizing that 10 buildings, and we want to revaluate one building because the cost is the market price is very high, and we want to recognize that asset in a fair value. But accounting is, as per accounting standard, we can't just revalue that one specific building. We need to revalue it, or we need to uh, we need to measure all the 10 building under fair value measurement, or we can say revaluation model. So that is important thing we should consider. Let's talk about under revaluation model. Again, under revaluation model there will be some revaluation gain and revaluation loss. Let's talk about how to treat those revaluation loss and revaluation gain in financial statement and profit and loss account. What will be the treatment for those revaluation gain and loss? Treatment of revaluation gain or loss on revaluation under revaluation model. In case of we are first time revaluating any asset, let's see if there is a upward revaluation. Upward revaluation means the cost of asset is 30,000, and now we are revaluating that asset upward. Means we are we see that the fair value of current time fair value is 32,000 instead of 30,000. So upward revaluation of 2,000, and there will be gain of 2,000 on upward revaluation. So that upward revaluation of 2,000 will be recognizing other comprehensive income or reserve as a reserve, recognizing OCI. We call other comprehensive income as a OCI, or short form is of other comprehensive income is OCI, and which is separate from profit and loss account. And let's see, what about downward revaluation? For example, the total original cost is 30,000, and now we want to revalue that asset as 28,000 instead of 30,000. So downward revaluation of 2,000. There will be loss of 2,000. That loss will be recognized in profit and loss account. Very simple. First time revaluation, upward revaluation OCI, downward revaluation profit and loss account. Very simple. Now let's talk about subsequent revaluation. After we have already revalued that asset, and again we want to use revaluation model for those assets. There will be some extra condition here. So subsequent revaluation, upward revaluation gain. We have a gain of 5,000. Now the asset we want to revalue is a gain of 5,000. It's arise due to revaluation. Now, and we need to check what was the previous year treatment. For example, previously or in prior year we have downward revalued that asset by 2,000. And this example, if you see this one, so we have downward revalued this asset, and the downward loss was 2,000. So that amount will be out of 5,000 to 2,000 downward revaluation will be charged to P&L, which is related to prior year downward revaluation, and remaining 3,000 will be recognized in OCI, other comprehensive income. So very this is also simple. In case of subsequent revaluation and to upward revaluation, 5,000 gain, and we need to check previous what was the prior year treatment. If there was a previously downward revaluation of 2,000, then that equivalent to that downward revaluation will charge out of 5,000 2,000 under profit and loss account, and remaining balance under OCI, recognizing OCI, other comprehensive income. Now let's see what will be the case for downward revaluation. Now let's see, previously upward revaluation of 2,000. Now we have a loss of 5,000, and the prior year we had loss of 2000. Sorry, upward revaluation gain of 2000. In that case, we recognize that 2000 prior year gain in OCI and remaining loss of 3000 in profit and loss account. Very simple. If we have uh, that reserve or OCI already with us in OCI other comprehensive income, we can set up those that loss up to that available revaluation gain with OCI, and balance need to charge to profit and loss account. Very simple. Same for both loss and gain. If we have a P&L item, then we can set up that gain with P&L and remaining need to be charged to OCI. And in case of loss, if we have upward revaluation earlier, we can settle out of total loss up to that amount in a OCI, and remaining need to charge to profit and loss account. I think it's very simple. You can refer that this chart, and it will make very easy to you to how to calculate and where to recognize loss and gain. Now let's talk about after now we have covered definition, recognition criteria, measurement, under measurement, subsequent initial measurement, subsequent measurement. Now let's talk about depreciation. After recognizing asset, now we need to charge depreciation. So depreciation is nothing but allocation of depreciable amount. I'll tell you what will be the what is the depreciable amount. Allocation of depreciable amount over its useful life on a systematic basis is the definition given by IAS. Allocation of depreciable amount over its useful life on a systematic basis. Now let's talk about what is the depreciable amount. Depreciable amount is cost minus residual value. So cost is the cost of asset that we have calculated in the earlier part, and residual value is we also call residual value as a scrap value. We are expecting to receive at the end of the useful life of asset. For example, we have that AC in the example, and the cost of AC was 30,000, and after 5 years using, we are expecting that the residual value, scrap value, or after selling that AC, we are expecting to receive 5,000, or we can say 10,000. Then that is a residual value or scrap value. And depreciable amount would be different between cost minus residual value. The amount that will be realized after the end of useful life of that asset is a residual value. So in this example, 30,000 was cost and 10,000 is or residual value or uh, scrap value. Then depreciable amount is 20,000. Depreciable amount will be 20,000, and over its useful life. What is useful life? Useful life is expected period of use. In case of AC that we are discussing, if we are thinking that AC will be, we can use that AC for 5 years. That is a useful life of asset. In case of mobile phone, we are buying any mobile phone, we bought any mobile phone, and the expected life for that mobile phone can be 3 year, 5 year, on the basis our best estimation. So that is useful life. And useful life can be number of production units. For example, we have some machinery or plant, and we are expecting to produce 10,000 unit or 50,000 unit of some final product. Then the useful life of that machinery is 50,000 production unit, not something we can't measure in the year, because if we are producing all the goods in within 2 years, then the life is already expired. And if we're producing over the long period of time, then life will be long. So we have useful life in two term. One is year, expected period of use, and number of production unit. And on a systematic basis means basis which reflect uses of asset. The method that I will discuss about different method in later part. So there can be different method: SLM method, WDB method, and unit of production method. We'll discuss about them. So let's repeat this one. Let's revise. Allocation of depreciable amount. Depreciable amount was that 20,000 in case of AC, and over its useful life, where for AC's useful life is 5 year on a systematic basis. We are expecting in case of AC 20,000 divided by 5. 4,000 would be the depreciation for that AC we need to charge over the 5 year life of that AC. So that will be the depreciation. 4,000 will be the depreciation, and basis of depreciation should be systematic. Now, how do we know the method we are applying is systematic basis? In case of production unit, let's take an example. In case of production unit, we can just depreciate that asset on with expected life of that asset. Instead, we need to calculate production unit. For example, we can, over the life of that asset, we can produce 50,000 unit, and first year we have produced 10,000 unit from that machinery. Then we need to calculate depreciation accordingly. So that means we have already used that asset for 20%. 50,000 is total capacity of that asset, and we have already produced 10,000 units. That means 20,000. We need to charge depreciation 20,000 for first year, and second year we need to calculate the production unit, and then we can charge the depreciation. So depreciation method should be systematic, which should reflect the uses of asset. Uses of asset means how we are using or utilizing that asset. Accordingly, we can charge that depreciation in the financial statement. Now, um, residual amount is estimated amount on disposal minus cost of disposal. That this is the definition of residual value. For example, we are expecting to receive 10,000 on disposal, and the cost of disposal, for example, we need to run some advertisement, or some we need to give some payment to agent. We have to reduce that amount. So for in our example, if the estimated amount on disposal of AC was 10,000, and we're expecting to uh, the cost of disposal is 2,000, then residual value would be 8,000. So now let's talk about depreciation in detail. When to start depreciation, when we should start applying the depreciation in PPE recognition, right? Firstly, when the asset is available for use. The available for use is, for example, we bought a AC in the month of, for example, December, but we're not using that asset, that AC in December, but we started using that AC from the month of March or April. Then uh, we have to apply that depreciation from the month of December only, available for use, because from December AC was available for use, not from the actual use. I'll tell you the reason. Reason is, for example, if you're not using that asset, but due to some technological change or due to time, the cost is reducing day by day. So we have to charge depreciation from the day of when it is available for use. We're going to stop charging depreciation when we asset is held for sale and the derecognition. When we categorize some asset or PP as a held for sale, then we do not have to charge depreciation on that asset. And in case of derecognition is removing asset from financial statement. Now let's see methods for depreciation. State line means simple method. Same depreciation will be charged over the life of asset. Straight line, SLM, we also call straight line is SLM. And then diminishing balance, WDB, we also call diminishing balance is WDB. WDB is uh, the depreciation charge on not original cost, but in carrying amount of that asset. So the depreciation will be reduced every year, which is also called scientific method, because every year we use the amount of uses of asset, or the revenue generating capacity of asset will decrease, and so that we also decrease the depreciation amount. Unit of production, we already discussed about unit of production method. So these are the three main method we should use for PP to calculate depreciation. In case of land, we do not charge any depreciation, because to charge depreciation we should have any useful life of asset. But in case of land, we don't have any useful life, so we do not charge any depreciation on land. In case we bought any building, and there is with building we have a land also, so we'll have to first segregate the cost of land and building, and we'll charge depreciation on the building, and don't will not charge any depreciation on land. So we should be very careful about this thing. Also, let's talk about consideration. What are the consideration that we need to think before charging depreciation? First is expected uses of the asset, and then expected physical wear and tear. Wear and tear means, for example, we are using car and the road is not good, so depreciation will be will be higher comparison to normal car. And in case of technical or commercial obsolescence, that means technological obsolescence. For example, mobile phone, if we take example, for example, we are buying iPhone 8, and in next time when iPhone release new mobile, that will upgrade the technology, so that there will be some technological advancement, so that your old phone will less valuable, and so that we need to consider that in charging, while charging depreciation. And legal or similar limit, we need to also consider that. For example, we have a car, and as for the government, we can only use that car for 10 years. Then after, we're not allowed to use that car. Then we can't have useful life more than 10 years. Even if we can use that car, the limitation is imposed by regulation. So our we should charge depreciation up to 10 year only. So these are the four things we should consider before charging depreciation and before calculating depreciation: expected use of the asset, physical wear and tear, technical or commercial oscillation, and legal or similar limits. And one more and one important thing about accounting standard, is per accounting standard, the company or organization should every year review residual value of asset, method, or useful life of asset, so that they will know the actual estimated residual value, method they should use, and useful life every year in financial statement before presenting in financial statement is also important part. Now, uh, let's talk about derecognition. The final, now moving to the final part, which is derecognition. We measure the PPE, and then we also calculate the depreciation. Now we'll see how to derecognize or removing that asset from financial statement. So now, PPE is capitalized in our financial statement. Now we need to de-recognize that PPE or remove that PPE from financial statement. Now let's see the condition for de-recognition of PPE or removing that PPE from financial statement. On disposal means simply, if you are selling any PPE, we need to de-recognize that from our financial statement. In our example, if we are selling that AC, disposing that AC, in that case we need to de-recognize that AC from our books of account. We need to remove that from financial statement. And one important condition is no future economic benefit is expected. If you are not expecting any future benefit to flow to the entity by using that specific asset, we need to de-recognize that from financial statement. To give an example, for example, AC is we have a AC, but AC is not operating, or we have a car but we can't give that car as a rental because of some reason, the year already damaged, or some reason car is not in operational condition. Then we need to de-recognize that from PP, because main condition to recognize any asset in financial statement is there should be some economic benefit or economic inflow to the entity by using that asset. But if we are not expecting economic benefit to the entity by using that asset, we need to de-recognize that from financial asset. Simple. And let's see how to recognize profit or loss on de-recognition. We need to de-recognize the PPE from financial statement, and there will be some profit or loss on derecognition, and we need to treat that profit and loss in financial statement, right? So in case of profit, we need to recognize that profit in profit and loss account, but as a separate line item, not as a revenue from normal business, because this is not something you generated as part of normal business. It is a extraordinary item, so we need to, so it is a in a profit and loss account, but a separate item in profit and loss account. In case of loss, net disposal proceed minus carrying amount should be recognized also in the profit and loss account. So, both profit and loss account should be recognized in profit and loss account, but should be in separate line. How to calculate that profit and loss account on disposal or derecognition? For example, the carrying amount of that asset is 5,000, and we are on disposal we are receiving 10,000. Then we have a gain of 5,000. But in case we are receiving on disposal proceed is only 4,000, but carrying amount is 5,000, then there will be loss of 1,000. So very simple. Net disposal proceed means any amount you receive on sale less carrying amount, means any amount capitalized in book or book value of that amount is on the date of sale or disposal. So that will be the profit and loss on say sale or disposal of or de-recognition of PPE. Now we have to discuss about disclosure. What are the disclosure, or what all we need to disclose in financial statement for PPE. Let's talk about disclosure in financial. Disclosure is nothing but something that we need to show in financial statement, so that the user of financial statement will be able to analyze and will be able to get sufficient information about the entity in relation to PPE. Uh, the disclosure which are general in nature, and there will be a specific for item stated at revalued amount. I'm going to talk about some important disclosure that need to be disclosed in financial statement. First is measurement base used. For example, initial measurement, how we are measuring our fixed asset, and subsequent measurement, whether we are using cost model or evaluation model, that we need to disclose. And depreciation method use, whether you are using WDV, SLM, or other any other method, that we need to disclose. The any useful life of asset or depreciation rate used to calculate depreciation also need to be disclosed in financial statement. Then we need to disclose reconciliation of carrying amount at beginning and end of period. That means opening balance minus addition of any new PPE. Deletion means any sale, and depreciation amount we need to disclose all the thing as a reconciliation with in a carrying amount. So these are the main disclosure that we need to disclose in financial statement. And for revalued asset, we need to disclose effective date of revaluation when we revalued that asset, whether independent valuer was involved. In case of, for example, complicated asset, we need to hire some professional or engineer, so that need to be also disclosed. And the revaluation surplus or gain on that revaluation surplus or loss on that revaluation, that need to be disclosed. um, with this, I would like to end the presentation for IAS 16. I hope you all enjoy or you have learned something. If you have any question, just let us know. We'll try to address your question. Thank you so much for watching. Thank you. Bye.